An option will awkward as always. How's everybody doing today? We had I went ahead and attended my regular jiu-jitsu class and then did a conference jiu-jitsu class. And whoo, buddy, I need a lot more of that biofreeze stuff for a while. I don't know. I'm debating on whether I'm going to go today or not. I am pretty wrecked. It was like, I don't know how many hours on the mat. At least like 3 hours on the mat, probably more. So it was 2 hours, hour and a half. 3 to 3.5 hours on the mat, plus workout and sauna. And working on taxes. I am out of it, boys. Out of it. Boom. Good morning, ladies and gentlemen, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I am Blind Run, or at least that's what I go by on the interwebs, and in real life, I go by Matthew. Today, we have some fun topics. We're going to be talking about Micron commencing volume production of GDDR6X memory for the 3090 Ti, and they're readying the fast 24 gigabit per second GDDR6. So faster memory coming down the pipeline, just awesome stuff. Intel is holding their grand opening for the $3 billion factory expansion in Hillsboro, Oregon. Awesome stuff there. Then we have Ethereum Merge, no longer expected in June. We have yet another tweet that gives us some more information on timing for the Ethereum Merge. Like I always tell you guys, this is a moving target. We gotta pay attention when we have a little bit of a better idea of when it's coming. Then we have Bitcoin's 4-year halving cycle may be dead. This is an opinion piece on CoinDesk. We've been talking about this though for a while. And I think it's important to see what other people's opinions are, because I haven't heard this mentioned a lot outside of this channel. And I wonder what people are seeing there. Then the US Sun has started a anti-Bitcoin propaganda series. And today they're talking about basically the correlation between being a psychopath and participating within cryptocurrency. Specifically, you are a narcissistic, deceitful, sadist psychopath if you are in cryptocurrency. All right? This is going to be a fun one today. So I hope you guys are ready to buckle in for it and sit down for the ride, because we are all over the place. Merge talk. We're psychopaths. No more 4-year super cycle. Whoo! This is a big one. I had to sleep in for it. All right. First of all, let's get into the ad and then we'll get rolling. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that, you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section, there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Best sponsor ever. Make sure you guys go ahead and hit that like button, hit the join button if you want to support the channel. gets access to the Rocket Chat. You don't have to continue the membership, but it's much appreciated. Let's get into the first topic for today. Micron commences volume production of 16 gigabyte GDDR6X memory for NVIDIA's RTX 3090 Ti, and also readies 24 gigabit per second GDDR6X dies for future graphics cards. Micron has announced that it has commenced volume production of 16 gigabyte GDDR6X memory dies featured on the NVIDIA RTX 3090 Ti. In addition to that, the company is also prepped with its future 24 gigabits per second memory dies, which will push performance further up on next-gen graphics cards. Coming from Boise, Idaho, April 12, 2022, Micron Technology Incorporated today announced the volume production of its new 16 gigabyte GDDR6X memory, which is now shipping in the NVIDIA GeForce RTX 3090 Ti graphics cards. The latest GDDR6X memory, available only from Micron, features twice the capacity and up to 15% higher performance over the previous 8 gigabyte version. These additional capabilities mean end users can experience razor-sharp visuals, higher frame rates, and outstanding performance in memory-intensive applications like gaming and content creation. No, sir. No, sir. Like Ethereum mining. That's what we're talking about here, because we're talking about faster memory. Today, Micron extends its performance leadership by providing a new graphics memory with 16 gigabyte capacity and running at an industry best 21 gigabytes per second in the GeForce RTX 3090 Ti. With a performance roadmap up to 24 gigabytes per second, GDDR6X is ready for data-hungry applications for the future. Additionally, Micron's innovative use of PAM4 signal techniques in GDDR6X makes it more power efficient than any of the GDDR6 products publicly available. We're getting more power efficient. We're getting faster. This is pretty awesome stuff. So take a look at this. Here are the bandwidth numbers you can expect from a 24 gigabits per second DRAM solution. On a 512-bit bus, that's going to be 1.5 terabytes a second. On a 384-bit bus, that's going to be 1.1 terabytes per second. On a 320-bit bus, that's going to be 960 gigabytes per second. On a 256-bit bus, that's going to be 768 gigabytes per second. On a 192-bit bus, that's going to be 576 gigabytes per second. On a 128-bit solution, that's 384 gigabytes per second. On a 92-bit solution, that's going to be 276 gigabytes per second. And on the 64-bit solution, that's going to be 192 gigabytes per second. Quote, the industry-leading capabilities of Micron's GDDR6X memory help bring new levels of realism and performance to the most demanding applications, said Mark Montier, something like that, Vice President and General Manager of High Performance Memory and Networking at Micron. Quote, Micron is once again at the forefront of the memory innovation, powering today's highest bandwidth solutions and built with the advanced process and interface technology to enable continued graphics performance leadership. As games and graphics rendering techniques become even more sophisticated, graphics processing units require massive amounts of data to move at incredible speeds, which can challenge systems' graphics memory. Virtual reality gaming, 4K and 8K monitors with 240 Hz refresh rates and intense 3D CAD applications stretch the limits of graphics systems. The unrivaled memory bandwidth of GDDR6X enables these high-resolution experiences with ultra-fast frame rates and near-instant rendering, providing users with lifelike effects. GDDR6X capabilities integrated with GeForce RTX 3090 Ti graphics cards improve real-time ray tracing and neural graphics processing to deliver the immersive cinematic effects of virtual worlds. And yeah, I said that a little bit different. The GeForce RTX 3090 Ti features 24 gigabytes of GDDR6X, enabling 40 teraflops of GPU performance. The breakthrough bandwidth of GDDR6X is possible because of Micron's groundbreaking work with PAM4 signal transmission technology, which has revolutionized how memory moves data. Micron's PAM signaling technique means GDDR6X increases memory bandwidth and power system bandwidth up to 1 terabytes per second, making it the optimal choice for graphics applications that require exceptionally fast, low-power memory. No other memory vendor offers this capability. The addition of 16 gigabytes of GDDR6X memory marks an important milestone in the growth of Micron's ultra bandwidth solutions portfolio, which includes GDDR6 and HBM2E. Together, these solutions comprise the industry's most comprehensive portfolio of high-performance, high-bandwidth products designed to feed data-intensive applications. I want to remind you guys of something. Remember that NVIDIA had basically moved all of their memory production over to TSMC at some point and moved it off of specifically Samsung. I'm kind of curious what all this has to do to play in play here. But either way, it's interesting that we have essentially faster memory. We were kind of aware of all these memories or all of this memory improvements, right? The interesting thing that we get out of this, or that I'm learning, is specifically PAM4 signal techniques in GDDR6X is what is driving the power efficiency. And so, yeah, there you go. This was on April 12th. Let's talk about Intel holding the grand opening for their $3 billion factory stateside. Intel holds grand opening for $3 billion factory expansion in Hillsboro, Oregon. Today, Intel marked the grand opening of the newest expansion of D1X, its state-of-the-art and lead factory located in Hillsboro, Oregon. Senior government officials and community leaders were on hand for the company's ribbon-cutting ceremony. Intel CEO Pat Gelsinger emphasized its favorable influence in Oregon and restated its pledge to U.S. leadership in semiconductor research and development. Intel also announced a new name for the nearly 500-acre campus in honor of the site's origin of innovative technologies, the Gordon Moore Park at Ronler Acres. That's fun. It's Moore's Law. The renaming of the site gives recognition to the area's exceptional assistance in driving Moore's Law, Intel co-founder Gordon Moore's 1965 foretelling that has operated unique invention discoveries in the semiconductor industry for over 50 years. Quote, since its founding, Intel has been devoted to relentlessly advancing Moore's Law. This new factory space will bolster our ability to deliver the accelerated process roadmap required to support our bold IDM 2.0 strategy. Oregon is the longtime heart of our global semiconductor R&D, and I can think of no better way to honor Gordon Moore's legacy than by bestowing his name on this campus, which, like him, has had such a tremendous role in advancing our industry. Gordon Moore Park is the center for Intel's International Technology Development Association, which is responsible for progressing Moore's Law by constructing new transistor architectures, wafer processes, and packaging technologies that mirror the company's product roadmap and supply the basis for applications varying from PCs to cloud infrastructure to 5G networks. The crew of roughly 10,000 employees, primarily established in Hillsboro, is widely acknowledged as one of the world's notable silicon process engineering associations. Over the last 25 years, the engineers and scientists at the Gordon Moore Park campus have frequently encountered and overpowered the challenges posed by physics when the elements on a chip minimize to the extent of particles. Intel has consistently supplied foundational process creations to keep rate with Moore's Law, with innovations like high-K metal gate technology, tri-gate 3D transistors, and strained silicon. Quote, these groundbreaking process innovations all originated right here in Oregon. With the new expansion of our D1X factory, Oregon is well posed to deliver the next generation of leading-edge technologies. Semiconductors are fundamental to U.S. technology leadership, our economy, and supply chain resilience. Intel, and that is the important one right here, supply chain resilience, guys. Intel is the only company in the world with the majority of its process and packaging R&D and high volume leading edge semiconductor manufacturing in the United States. Once again, I want to reiterate the importance here right now, especially with everything going on globally, is that the US has this being built here. And it's important, especially for supply chain right now, especially with everything going on with China, kind of their threat to take over Taiwan. And, you know, I believe it was Malaysia that Intel had moved a lot of manufacturing to. And then we still have, I believe, another Intel factory announced for Ohio. Correct me if I'm wrong. I have to do all of this live and off the top of my head. I didn't have a chance to pull that up, but I believe it's Ohio as well. So this is all really good news. In 2021, Intel revealed one of the most intricate process technology roadmaps in its long-standing history. The company has shifted to an increased rate of innovation to promote an annual rhythm of advancements, leveraging futuristic technologies that will drive new products over the next 3 years and further, including Ribbon FET, which is the first new transistor architecture in over 10 years. Power Via, a new backside power delivery method, is a first for the industry, and the utilization of high NA EUV next-gen lithography. I apologize for my dyslexia there. With Mod 3, a more than $3 billion investment to expand D1X, Intel engineers now have an extra 270,000 square feet of space to design next-gen silicon process technologies. Multiple logic process technologies are in different stages of the development cycle in the D1X factory. The technology development team assembles the baseline manufacturing tech needed to convey innovations to fruition. New process technologies are then repositioned identically from the central development factory in Oregon to Intel's global network of high-volume manufacturing locations. The web of factories and development factory cooperate to drive operational advancements. This direction by Intel allows for a fast rate of operation, fast learning, and satisfactory quality control. This largest expansion constructs on Intel's 50-year history of financing in Oregon. Intel's processes in Oregon are its most considerable concentration of facilities and skills worldwide, with 22,000 employees across 4 campuses in Hillsboro. The Mod 3 expansion ushers Intel's total investment in Oregon to more than $52 billion. Intel's full yearly economic impact is more than 105,000 jobs and more than $10 billion in labor income and $19 billion in gross domestic product. These are the kind of moves, obviously, we need in the United States. I would also hopefully we'll see this, translate into the GPU market eventually for Intel, moving into that here soon, as well as the ASIC market, which we're aware that they're working on as well. And don't forget, I believe we have a whole other factory coming up in Ohio as well. So let's get into a quick topic. We're not going to cover the merge too much. We just basically have a very small tweet from Tim Biko. I should, you know what? I've heard it before, and something in my brain, it clicks back and forth. Doesn't matter. He's been the one that has given us the best ideas of basically delays. That doesn't mean that he's, predicted when the merge will come ever. He's just the best one to look at whenever we're trying to determine if there's going to be a delay or not. And as we saw yesterday, as he had said, the merge would not happen in June. But when is it happening? And this is the question that everybody's trying to figure out. I see a lot of arguments in the comments from yesterday over all of it. People are like 2023, and other people are like, no, that's silly. And Bitsby Trippin said this, but Son of a Tech said that. Look, the fact of the matter is nobody knows, okay? So there's no reason to try to set up attacks between people. All we can do is really wait till April 29th for basically what should be an announcement of a difficulty bomb defuse. And then we'll know basically how long we have before the next bomb starts to go off. In my own calculations and seeing how miners are going to react, etc., I would expect that they would try to plan it a lot further away from when the bomb goes off. Meaning, like, for example, since the bomb goes off in May and then basically gets really, really difficult in July, and miners will directly influence how bad the difficulty bomb will affect the network, I would assume they would want to do it, like, if it was going to be this, during this cycle of bomb diffusal would have been in May, right? So even if we see it extended out till, let's say, December, I would expect it to be done in September, right? If it gets delayed till sometime next year, like let's say next year in June, I would expect it to be kind of done in May, right? That's kind of what I'm thinking, because you really don't want to have that bomb affecting the network while that you are trying to transition. That would be my personal thoughts if I was trying to strategize this. But this wasn't an article from CoinDesk, but all we're really interested in is this specific tweet on April 12th. And J-Rock had asked, still looking like June for the plug pull, or will the mining community have some more time? And Tim said it won't be June, but likely a few months after. No firm date yet, but we're definitely in the final chapter of proof of work on Ethereum. So what do we know? We got a little bit more information, just a little bit more information. What's that information? It will be a few months after June. So there's no small fork happening like they were talking about, like the mini 2-week fork that would push it out just a little bit further. It's definitely going to be, from what I can tell here, a standard, like 4 months is the shortest. 10 months has been the longest recently of the difficulty bomb delay. So when he says a few months, I'm thinking a 4-month difficulty bomb delay. If that's applied in May, you would have June, July, August, September. That would be in September, like we talked about yesterday. So I'm feeling pretty comfortable with a difficulty bomb to September. And if that's the case, maybe a month before that or something, August or somewhere around there. If they only do a 4-month difficulty bomb delay, it would be kind of hilarious, because we would follow the same pattern as we did last year. And we could see another difficulty bomb delay in August to push it to December. Because basically what happened it's hilarious how similar this is for the delay timings compared to last year. So if they delay now, you'd be delayed till September. If they delayed again, they would delay in August till December. And then if they delayed again, it would be December to June. So it seems eerily similar. It's just like keep pushing out just a little bit, 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 and go from there. I do want to point out that I completely agree with Bitsby Trippin on the fact that we do know that they don't like to push updates during the holiday season. So if you see a delay till December or sometime during the holiday season, we can almost anticipate for sure that they won't push the button during the holiday season, and it'll be pushed into 2023. I understand that argument. I do not disagree with that argument. We just don't know until we know the exact timing of the delay, which should be announced on April 29th. So that's kind of where we're at. We'll keep you guys up to date. I'll keep you guys up to date as it comes along and we get more information. We had a little bit more information today, so I gave it to you guys. I understand in chat, everybody wants to ask that question over and over and over again. We're trying to cover it, but without more information, we can't really cover it anymore, right? So there we go. A few months past June. So we're past the June mark. High five. You can mine Ethereum longer if you so choose. But I think miners should probably start trying to determine what they want to do. And basically other networks need to start incentivizing miners to move over to them, especially GPU miners. Let's talk about the Bitcoin 4-year halving cycle may be dead. Right after I take a sip of my coffee. Delicious. Delicious. We should have just named the stream Ethereum Merge delayed a few months. Boom. Look, we had already prepared the clickbaitiest title that I could, but that's fine. We all know that I have to always talk about Ethereum in the merge. So we just had a little bit of a change there for later for the algorithm. That's all we did. All right. Let's talk about Bitcoin's 4-year halving cycle may be dead. The latest moves in crypto market in context for April 13th, 2022. So this was released today at 9:34 a.m. We have been talking about this for a while on this channel. Is the 4-year halving cycle dead? It's also referred to as the super cycle. Essentially, what is the super cycle? Maybe they'll cover it in the article, but I can cover it for you guys here. What happens is you have a halving for Bitcoin every 4 years. After the halving, the price of Bitcoin goes up. Why does the price of Bitcoin go up? Well, the price of Bitcoin goes up because the newly minted Bitcoin that gets paid out to miners is reduced in half. You basically have two ways that miners make money on Bitcoin. One is going to be transaction fees, and the other is, of course, the minting process for the new Bitcoin. Now, Bitcoin does have an ultimate supply cap, and because of the halving, etc., that won't end until around the year 2140. So from an investment standpoint into mining, Bitcoin does have almost the most guaranteed extension of basically mining. Of course, you have to deal with the ASICs and the availability of those ASICs, etc. Now, when Bitcoin goes up due to the halving, the other thing that happens is the rest of the market goes up too. Why is this? Well, that's because traditionally in the past, you had basically all of the other cryptocurrencies, altcoins, shitcoins, they're all coupled with Bitcoin in some way because they were paired together. It's becoming less and less common. You can basically directly exchange into a lot of the bigger cryptocurrencies like Ethereum, so on. Interoperability is also changing this too, but for the most part, everything kind of follows Bitcoin. So that's why the markets kind of just always end up following the Bitcoin super cycle based around the halving. Now, after the halving and about a 2-year pump up somewhere around there after the halving, you end up having basically a bear market. So you have a bull run right after the halving, and then you have a bear market for 2 years. As we've been talking about, this bear market that we would traditionally expect to be around now doesn't seem to be coming to fruition, at least to the extent that it used to. Why do we say this? Well, previously what you would see is the price of Bitcoin go up and then come back down to the previous super cycle's all-time high. The previous super cycle's all-time high in this particular case would be 21,000. We have not gone back down to 21,000 in the expected time frame, as we should be dipping down closer and closer to that. However, we are stuck at a weird sideways stalemate in price. Does it matter as much? I don't know. But markets are up today, right? Bitcoin crashed below 40,000 yesterday and is back over 41,000. I am not a trade analysis guy, nor do I really actually research much in trade analysis. So, not financial advice. This is kind of where we're at though. So they say, good morning and welcome to First Mover, our daily newsletter, putting the latest moves in crypto markets into context. Here's what's happening this morning. Market moves. Bitcoin steady as race among central banks to hike interest rates heats up. And then Bitcoin's halving induced a 4-year cycle may be dead. This is kind of what I was looking for. Let's see if we can find it. Okay. Is that right here? Yeah. So Bitcoin continued to trade sideways at around $40,000 as the dollar index resumed the uptrend and the race among central banks to hike interest rates intensified. The Reserve Bank of New Zealand raised the benchmark rate by 50 basis points to 1.5% during the Asian trading hours, delivering its fourth hike in a row. The case for a 50 basis points interest rate hike from the U.S. Federal Reserve next month has strengthened in the wake of Tuesday's hotter than expected inflation release. I believe we're at 8.5% for clarification on that. Highest in 40 years. The Bank of Canada is also due for a similar oversized move later this week, while the European Central Bank is expected to raise borrowing costs 4 times within a year, according to Bloomberg. With so much tightening in the pipeline, the path of least resistance for risk assets, including cryptocurrencies, appears to be on the downside. Bitcoin and Ether options markets are seeing renewed put bias. A put option gives protection against bearish moves. From a technical analysis point of view, Bitcoin looks weak with the averages and the exponential moving average EMA ribbon converging for an eventual bearish signal similar to the one produced before the early December slide. The cryptocurrency's inability to chart gains following Tuesday's weaker than expected core inflation data may be a cause for concern for the bulls. Expert has called the core consumption price index CPI data bullish. And actually, if we look at it, we can already see Bitcoin recovering. So maybe they reported on this a little too early. And this isn't what I wanted to talk about. So I thought I had this story pulled up. So let me go ahead and try to search their site for this. Give me a sec. Well, I guess I'm confused on how this particular website functions. They're saying it's over, but there's no points. There's a featured story here, but no. Oh, here we go. Got it. Okay, just got to scroll down further. This is the one we want. Bitcoin's halving induced 4-year cycle might be dead. Amid the Fed-induced gloom and doom, some investors are betting that history will repeat itself with animal spirits returning to the Bitcoin market in the lead up to following the mining reward halving due in less than 2 years. However, observers suggest otherwise. Bitcoin at $43,000 is pricey for a halving that's 2 years away. Its simple fundamentals let the price sink for a while, end quote. One market participant tweeted earlier this month, while another Twitter handle expressed excitement after noting Bitcoin's record of charting meteoric rallies after reward halving. To the uninitiated, Bitcoin's mining reward halving is a program code to reduce the pace of supply expansion by 50% every 4 years. Essentially, the cryptocurrency's monetary policy is on a preset tightening path, contradictory to the ever-increasing fiat money supply. That's one of the main reasons the crypto community considers Bitcoin a digital gold and an alternative to the US dollar. The impending halving in 2024 will reduce the per block reward from 6.25 Bitcoin to 3.125 Bitcoin. That's a huge cut too. This one seems like a big one to me. I don't know. Historically, the halving cycle has comprised a 2-year recovery rally ahead of the event, followed by a year-long meteoric run in a 12-month bear market. If the past is a guide, 2021 was supposed to be a bullish year like 2017. Bears are to control price action this year, paving the way for recovery rally next year and a bull run after the 2024 halving. However, the bull cycle is unlikely to repeat itself, according to Katie Talati, something like that, director of research at Arca. Quote, there are a couple of reasons. The first is that the power of miners has diminished greatly since the last halving, end quote. Talati told CoinDesk in a Zoom call. Quote, there is just so little Bitcoin being released right now. Back in 2018, the narrative was much more driven by miner influence, and that's not the case anymore, end quote. I kind of disagree, but let's continue. Glassnode data shows the 30-day average of the number of Bitcoin minted currently stands at 900 BTC. No, we're not going to continue. I'm going to tell you why I don't think that's the case. Okay? All right? And remember, we do all of this live. What they're trying to say is that the mining influence isn't as high. What you have to take into consideration now, especially since we have seen the move from China over to the United States, is that we have institutional investments, we have statewide utility companies getting in, we have much larger infrastructure and investment into infrastructure for mining Bitcoin, that we have now seen essentially what is breaking the mold of hash rate increasing regardless of price of Bitcoin. And typically in the past, what we have seen is, of course, the miners essentially going ahead and moving the hash rate up with the price. What does this mean? This means that miners are influencing the network just in a different way, because basically now you have a lot more money coming into it and a lot more people competing over hash rate, and the hash rate is exponentially growing. It basically means that there's a lot more trust in Bitcoin moving forward. There's a lot more security, there's a lot more trust, and therefore, of course, people are willing to compete for lower and lower rewards of Bitcoin as we move forward, and this will get exponentially worse over time, even through the next halving, right? People are going to continue to buy $10,000 miners for less and less return on investment, right? Less and less revenue. We already see a $10,000 miner is only giving you something like $13 to $15 a day, and that was never the case before. However, the bull cycle is unlikely to repeat itself, blah, blah, blah. We got there. Glassnode data shows the 30-day average of the number of Bitcoin minted currently stands at 900 Bitcoin, worth 35 million US dollars. That's just 0.14% of Bitcoin's 24-hour trading volume of $24.7 billion. The average stood at over 12,000 BTC 10 years ago, above 4,000 BTC between 2013 and 2016, and above 2,000 Bitcoin before 2020. Besides, with the availability of miner financing facilities, miners no longer need to sell their rewards or coins received for validating transactions on the blockchain to fund their operations, as was the trend in the early days. And that's a good point too, because essentially, especially with DeFi coming into play and the way people can basically put up their cryptocurrency, their Bitcoin that they've mined as collateral to then get more fiat currency to then increase the size of their farms, they're a lot less likely to sell. In my particular case, I'm a little too small to like put up a ton of collateral in cryptocurrency because I'm kind of like in the survival mode. But that being said, it does make a lot of sense here. Quote, the 2021 migration of hash rate to North America accelerated this by change of improving miners' access to sophisticated financing options. And this is what we talked about just a second ago. The growing number of listed Bitcoin mining companies has further boosted access to capital markets, end quote. CoinDesk's sister company Genesis Global Trading said in a daily newsletter dated December 27th. Quote, with greater funding availability, miners no longer need to sell Bitcoin to fund operations and expansion. This reduces the selling pressure in the market. So I kind of get their point. That makes sense. Miner influence is still a thing, but because of the way you are able to get financing and the move to North America, you're not seeing the selling pressure, which means the miners are not influencing the price as much because they're willing to take a lower price on the collateral in expectation of Bitcoin going up in price later on down the road. The place where you get in trouble if you are one of these people participating in kind of the alternative financing world surrounding cryptocurrency is if you have a huge dip in Bitcoin and you borrowed against it at 41,000, it really does go back to 21,000, you're going to be in a lot of trouble, right? You'll get liquidated. All of these factors have made miner flows irrelevant to the market. More importantly, the demand side is strengthened with the entry of institutions and macro traders after the March 2020 crash. Quote, there is so much more demand from the traditional world and institutional investors accessing the market that you are just not going to have, like bottoming out of Bitcoin in 2014 and 2018, Arcus Talati noted. Big firms from traditional markets are hiring crypto talent, ignoring the dour price action. That's in stark contrast in previous bear markets when people left crypto jobs and moved to traditional finance. Golden Tree Asset Management, a New York-based firm with $45 billion under management that added Bitcoin to its balance sheet last year, recently hired Block Tower Capital's co-portfolio manager, Avi Feldman, as its new head of digital asset trading. That's a positive sign. Quote, "Today I am seeing really smart people getting involved despite the bear run," end quote, Talati said. Talati, something like that. Quote, "To me, I just don't feel like we are ever going to see that 4-year cycle again," end quote, she quipped. That does not necessarily mean crypto there won't be a Bitcoin bull run and a halving is irrelevant. It's just that crypto market has matured with several factors influencing valuations, as is the case with traditional markets. So the 4-year halving focused cycle offering easy money is perhaps dead. I still think the halving will have a direct Ugh. All right, so I think we're connected now. We have some, essentially outside, we have some construction still going on next door. And I don't know, hopefully they didn't clip anything. AT&T still has not buried my line, so I'm a little nervous. I have never had it just clip off and drop like that in the past, so bear with me. I hope that this is going correctly and we're all good to go. I think we are connected and ready to continue. So, is the traditional, so I think all right. As far as the Bitcoin super cycle is concerned, I don't think it will be as pronounced as previously expected. So I don't see necessarily a tripling from the previous all-time high, right? So this year's all-time high was what? Was it 69,000? Whatever it was. Let's just say 70,000. You would expect the next halving to influence it to go up to, what is it? $210,000 at the peak of the next cycle after the 2024 halving. I don't think we'll see as pronounced increases in price, but I also, on a positive note, don't think we will see as pronounced dips in the market as well. Meaning, I don't think you'll see it go up to 210,000 and then come back down to 60 to 70,000. Just like I don't think we will go all the way back down to 21,000 now, as initially kind of anticipated. So I think what you are seeing is really an adjustment of the super cycle, not necessarily a complete death of the super cycle. But you know, I'm a psychopath, I'm a narcissist, I'm deceitful, I'm a sadist, and that is all according to the US Sun. Let's get into it. All right, a team of experts recently surveyed more than 500 people to uncover personality traits that are common among crypto nuts. They identified that investors exhibit signs of the dark tetrad, a group of 4 unsavory traits made up of narcissism. I don't actually know this one. I don't know how to pronounce it, but I guess we could Google it. Let's go ahead and Google it. I should really know how to pronounce this, huh? Bam. Let's do it. How do we pronounce it? Well, let's listen. Let's listen. Machiavellian. All right, there we go. All right. Machiavellian, psychopathy, and sadism. There we go. In plain English, that means dark tetrads have an inflated sense of self-importance and derive pleasure from the pain of others. They also find it difficult to empathize with others and are sly and manipulative. Scientists at Queensland University of Technology described their findings in research published in the journal Personality and Individual Differences earlier this month. They asked 566 people to complete personality surveys as well as answer questions about their attitudes to crypto. Of the participants, 1 in 4 reported that they owned crypto and 2/3 showed an interest in crypto investing. All 4 dark tetrad traits correlated with an affinity for investing each for their own reasons. According to the researchers, dark tetrads are partly drawn to crypto because they are prepared to take risks. Digital assets such as Bitcoin are infamously volatile, and the feast or famine nature of investing is particularly enticing to some. Study lead author Dr. D. Wang wrote in The Conversation, quote, "Dark tetrad traits are dark because of their evil qualities, extreme selfishness, and taking advantage of others without empathy. Quote, the dark tetrad are also often related to risk-taking behaviors," end quote. The link between the traits and an affinity for Bitcoin is also driven by the fact that the currency does not have a central authority, meaning it's separate from banks and governments. Machiavellians, did I say that right? Who are good at deception and take a calculated approach to achieving goals like crypto, quote, primarily because they distrust politicians and government agencies, end quote, Dr. Wang said. So, am I reading this right? All right. If you are distrustful of politicians and governments, you are a psychopath, apparently. So, I don't know. I guess I'm a psychopath. He added, many crypto supporters believe governments are corrupt and crypto avoids government corruption. Got me there. Narcissists, on the other hand, are drawn to the technology because they tend to focus on the positive side of life. I'm narcissistic. Damn, bro. The researchers found that narcissists like crypto because of their great faith in the future and confidence that their own lives will improve. Oh, wow, you're an evil person. Oh, my God. It's terrible. Terrible. Lastly, impulsive psychopaths and sadists like crypto because they are thrill seekers who fear missing out on the rewards of investing. Quote, to them, perhaps both the pleasure from seeing another's pain and the fear of missing out are related to selfishness, end quote, Dr. Wang wrote. Nah, bro. I want everybody to be successful in the industry. Maybe there's a difference between investing in mining and investing in cryptocurrency, but they did nail me down on a couple of these. If you're a crypto fan yourself, don't fear, investing doesn't suddenly make you evil. We studied only a subset of people interested in crypto who do have these traits, Dr. Wang said. If you happen to be a Bitcoin or other crypto holder, you may not exhibit them. Yeah, but it's kind of weird that, all right, look, the FUD's coming everywhere. They want to set up cryptocurrency enthusiasts, people that support it, into a box of people that they can attack as an other. I think that we'll see a lot more opinion pieces, articles, so on, that go down these lines. Be careful when you take a look at these. You can basically work on yourself, and you can, do meditation, whatever it may be. If you're worried about having any of these traits, I don't think that necessarily there is a negativity in distrusting government or banks. I don't think that that is a negative. And I also don't think that there is a negative in basically, what was it? What is this? Focusing on the positive side of life. So I don't think that there's a negative in that either. This is pretty ridiculous. I just wanted to share it with you guys. I found it from Mean Hash on Twitter, so shout out to him. Go follow Mean Hash. He always posts some really interesting stuff on Twitter. All right. Let's talk about mining profitability for the day. Last 24 hours was pretty good, guys. We were hitting, we hit $262. Our projected was much lower than that. So we mined 0.084 Ethereum, the most we've mined in the past 24 hours in a while. And that did come out to $262.78. However, the projected for the next 24 hours is only 0.069, which is right around what I would expect, 0.07 to, or 0.069 to 0.072 or whatever is about where we sit. That's going to equate to $215 US for the day. A little bit better today or yesterday, the last 24 hours, which was projected to be much lower, around 220 US dollars and 0.06 something, 69, or it was 0.07. Anyways, it's looking better than it was. I don't think we had another spike though. Somebody had spiked this up to 10 gigahash for a while. So it is getting to the point. Look, I appreciate the mining that's going on there, but we do have to just say, thank you for the donations for hash rate. That's amazing. We're not going to be able to really, outside of full transparency for the channel, which is what we'll continue to do. We won't be able to really use this as a basis, when this is happening, right? So it is what it is. We'll just have to rely on our typical tools like what to mine and so on for that. Also on Varus Coin, thank you to Real Regos, who has been on mining for us over here for quite some time. We're doing 1.58 Varus Coin. That is down. We've maintained the same hash rate, but the actual payout is less. So, I think that's $1.65 USD for the day. Let's take a look at what to mine for the RTX 3090. Let's correct the Zell hash and calculate that out. Ethereum at $4.21 a day after power, with Zell hash on NiceHash coming in second at $3.16 a day after power. Once again, going to be paying out more on NiceHash than it is on mining Flux directly at $2.84 a day after power. I don't know how much I have to reiterate the issues that are going on or being created by this sort of 50-50 kind of node proof of work setup. It's kind of odd. I'm hoping that it gets studied out. I don't even know if there's an actual viable solution to prevent this at all. I think that it just keeps going this direction. Other than I could say, hey, all GPU miners, can you guys stop using NiceHash because you're just making the networks unpredictable? But I know that won't happen. So, yeah. All right. Then we have Ethereum Classic at $2.77 a day after power. Ryo at $2.81 a day after power. We did miss Octopus here. $2.90 a day after power on Conflux for the 3090. If we scroll down, we have Ravencoin at $2.52 a day after power and Ergo at $2.51 a day after power. And I believe that's pretty much going to wrap that up. Let's look at mining pool stats, kind of see if anything has changed dramatically. We're about 4 exahash down on Bitcoin at 220 exahash a second. Let's take a look at Ethereum. Ethereum's still sitting right at 1 petahash a second. Let's take a look at Ethereum Classic. Still sitting right around that 28 terahash a second. Very steady. I think that Ethereum Classic is looking really good as far as just network reliability for miners. For sure. We do, Zilliqa, you can't really determine. It's very hard, but anyways, there's Zilliqa. Let's look at Flux, which we are expecting to be kind of all over the place like we've talked about in the past. Solo mining going on, 2-miner solo mining going on. A more steady solo mining at fluxpools.net. It's been kind of just sitting there right at 9.81 kilosolutions a second. It's a little under 2 mega solutions a second at 1.94, so a little bit of a drop. Once again, it's just highly unpredictable at this time. Take a look at Ergo, which is going to have the same issues. Right now, we're on a downtrend for difficulty. So I believe it's right about now. How many days has this been? Well, okay, hold on. 1, 2, 3, 4, 5, 6, 7. So, and then if we start here, March 25th to April 5th, about 10 days. Yeah, right around now is when you're going to want to be hopping on Ergo. If you want to hop over to Ergo for a little bit, and then we'll probably have somebody rent a bunch of hash rate or somebody put a big farm on there, and we'll see another big spike in difficulty. Then you'll have to wait that out, take your rigs off for a little bit, and then put them back on. Really hope this gets resolved. But if you were going to mine Ergo, I think right now is right when the kind of the difficulty's dipping. You might be able to catch that train if you play your cards right. Raven Coin, actually a pretty significant dip in difficulty, down to 3.34 terahash a second as well. So there's that. That might be looking more profitable over the next week as well, due to that dip. So there you go. Mining pool profitability for the past 90 days, Flex Pool in first, Mining Pool Hub in second, Crazy Pool in third. For the last 60 days, Mining Pool Hub in first, Flex Pool in second, ZET in third. For the last 30 days, Flex Pool in first, Mining Pool Hub in second, Nano Pool in third. For the last 21 days, Flex Pool in first, Ethermine in second, Nano Pool in third. For the last 14 days, Flex Pool in first, Mining Pool Hub in second, Crazy Pool in third. For the last 7 days, Flex Pool in first, Mining Pool Hub in second, Crazy Pool in third. For the last 3 days, Crazy Pool in first, Flex Pool in second, Ethermine in third. And for the last day, Crazy Pool in first, Flex Pool in second, and Mining Pool Hub in third. ASIC miner profitability. Let me get this refreshed for us. We have the Jazz Miner X4 still in first place, $113 US. The KD6 still sitting low at $94. Has not really gone up. KD5 also still down. For the price of those miners, it makes it pretty depressing to invest in. But it is what it is. We have the KD2 up here. Antminer Z15 doing about 18, 20 bucks a day. On the S19 Pro, it is up from the $13 a day to $17 a day. So a little bit better on the SHA-256 miners. Are there any good sales on BT miners? Let's take a look. We have the KD box at 6,200, no real decrease. S19 Pro 9,500, no decrease really over the last little bit. So nothing really there that I'm seeing. Another note here that I wanted to talk about, and I don't know what's going to happen with me or what, but I haven't gotten my Koi miner back, and they are no longer listed for sale. Let's see, are they listed over here? They're just not listed on the main page. No, they're not listed. So I do need to do an updated review on the Koi miner. And I do need to talk with the representative over there, see why they've stopped selling them. Obviously, I'm in a pickle. That's what I kind of took as payment for the advertisement with BT miners. And the factory shut down. I haven't gotten my miner back. I don't know that I ever will. I don't know if I can work out getting a S19 or something from them. We'll just have to see what happens, right? I'll keep you guys posted. Hopefully what that means is we just work with them to get a different miner, possibly. And then from there, we get another miner to review. But I will be doing an updated miner on the Koi miner. Pretty disappointed, personally. But it is what it is. Let's get into questions and answers. Remember, super chats, never required, always appreciated, first to be answered. I did notice a couple super chats coming through. I don't know if I'll be able to pull those back up again. I'm going to try, but as it sits right now, I don't think I can scroll up far enough for all of them. Let me see here, especially since we disconnected. I got one. Okay, I got both the super chats here ready to go. So first of all, we have 100 from Barinder Singh. Thank you. Says, bro, this 30% tax in India is screwing my living. Currently living on $250 a month and have to pay tax over it is so sad. I'm sorry, my man. Hopefully you get it figured out. That 30% flat tax is, yeah, terrible. Terrible. I don't know what else to say. You know, we've covered it on the channel. It's pretty awful. Stiggy38 knock 50 says, when you are fixing the rigs and it gets very hot, you have ever thought about having no, we're not reading that. All right, let's go ahead and pop out the chat and get some more information going for you guys. Remember, tag @SonOfATech for the answers. So, Detroit Irish says, Ask Tech, I think the nice hash issue is going to get worse post-merge as there's no real penalty for coin hopping like there is if you mine to your own address. Plus PD in Bitcoin paid in Bitcoin, so it saves transfer fees, etc. And I think you have a fair point. I'm not really necessarily sure that I'm not sure that I like it, but I'm not sure there's much I can do about it, if that makes sense. Daniel Ring says, Ask Tech, sorry about the koi. Thanks for being a guinea pig, though. Yeah, I need to update my review and then figure it out. You know, I've had it on RMA for a long time. It only mined for like 2 weeks. It's been on RMA longer than it was mining for. At least we got to test it. I think that does mean that any ASICs that we have, we probably want to basically run it on the network for an extended period of time, 2 weeks to a month before we even release a review. All right. Crypto Man, make sure you guys tag at Son of a Tech. Crypto Man 5000 though says, is it worth it to get an S19 today? I feel like prices should be coming down, especially with more competitors coming into the market. Hawk Crypto Mining, thank you for the 20, says, at Son of a Tech, I'm having trouble pinging certain pools. Is there an easy way to do it? How many S19 110 terahash would you need to solo mine? Might be a stupid question. I don't know the answer on that hash rate for Bitcoin. That might be kind of fun to do the math for. Definitely don't know it all off the top of my head. And then for pinging certain pools, are you utilizing the Stratum ping tool from 2Miners? Because that's what you should be using. And then which pools, if not, are you having trouble pinging? Kyle Cox says, Ask Son of a Tech, is there any hope for Chia? Not in my humble opinion. Infamous Goblin Loser says, question for chat and Son of a Tech, pretty basic, but is the Ryzen 5 5600X better than the Ryzen 5 3600 in general computing power in gaming? Not to a significant margin, at least in my experience. I think like the 3600 in general computing, and you can even see it in the hash rate comparisons. The 3600 and 5600 are pretty on par. As long as you have like the same memory in there and so on. But we do have that refresh coming out, so you may not want to purchase one anyways. Rad CPU Man says, Ask Son of a Tech, new T-Rex 2510 beta is looking promising, increasing your light hash rate cards from 2 to 4 mega hash. Nice. I was aware of that. I haven't tested it because, yeah, I'm waiting for the official GitHub release. Crypto Man 5000 says, Ask Son of a Tech, thanks for the answer. Yes, sir. Hawk Mining Crypto says, Ask Son of a Tech, no, haven't used those. You'll try it. Yeah, use that because it'll communicate with the pool over the basically over the protocol that is required. Minor Illusion says, Ask Son of a Tech, Bitmain used to update their pricing every 2 weeks or so based on the market. Now it's really extended. Gouge much? Well, the thing is, like I said, what we're seeing because of all the institutional investment and so on, is we're seeing an increase of hash rate on Bitcoin regardless of the price of Bitcoin. There's no reason to reduce the pricing of the ASIC miners if people are still paying what they are. And then if they really need to get rid of a lot, they're just selling it in bulk pricing at a cheaper price to everybody else. That's essentially what's happening. Leonardo says, Ask Son of a Tech, ever used P-State 0 on the 3080 on HiveOS? No, I haven't. Let me know if it was working good for you. Stick Shark says, Ask Son of a Tech, I got 4 new 1660 Supers with Hynix, but the negative 1004 on the memory only does 28 mega hash. I have to do 2300 to get 31. All the others you have work at a negative 1,004. That's interesting. I haven't had any Hynix ones that do that need an overclock. So I don't know what's changed, if something changed in the manufacturing of those memory modules or what. I don't have one to test with though, I'm sorry. The last 3 I got are working at those typical negative 1,004. Fearless says, at Son of a Tech, please tell me, sir, I want to invest in a mining rig. Please suggest me crypto mining is future or not. That is all going to be due to your risk tolerance. If you're narcissistic, etc. No, just kidding. But, you know, I think that like you need to do your research. Start with one GPU. See if it's something that you're willing to do. It does take a lot more work than pretty much the majority of the internet thinks it does. And you're going to have to put in the work. And so start small, start putting in the work and see if it's the type of work you enjoy doing. Jorge says, or George, however you want me to pronounce it, says, at Son of a Tech, I am doing $1 a day on Chia. Maybe someday in 20 years it'll moon. Sean Voltes says, at Son of a Tech, EVGA price drop at Micro Center. Nice to know. GoldenEye forever.com says, at Son of a Tech, do you see a point where some of the ETH devs walk away from the proof of stake project? No, I do not see a point at any point that they would move away from that, in my humble opinion. They're too far along. They basically just made it easier to move to proof of stake without having to implement all the rest of the scaling. I think the main goal is moving to proof of stake over actually scaling and sharding, etc. John Lemon says, at Son of a Tech, do you have CK ASICs? No, I do not. Blacksmith Mining LLC says, at Son of a Tech, do you think a recession could affect proof of stake on ETH? Well, obviously, the recession is going to affect a lot of things. The question will be, are the fundamentals of cryptocurrency, specifically, we could see this in relation to the price of Bitcoin, will those be realized and will they be valued? And in the case that they are realized and valued, I think that Ethereum would go down with traditional markets while Bitcoin would go up. But that hasn't been what we are actually seeing happen. So I think that people are aware of Bitcoin. Some people are aware of the fundamentals. And if it proves out to start being a hedge against a recession, then I think a lot of people will start moving into Bitcoin away from Ethereum and other altcoins in general. But it's really hard to predict that. So, you know, not financial advice. I really have no idea what's going to happen. You know, a lot of crazy stuff going on in the world. Paul says, at Son of a Tech, is dual mining ETH and another coin more profitable at the moment? I mean, it's technically always more profitable unless you are not able to do it due to the increased power cost. So it's always going to come down to, yes, you would mine more crypto. Is that extra crypto you mined going to cover your power costs? And if not, then I don't know what to tell you. So you other than you just wouldn't do it, right? It's all dependent. All right. Andre says, at Son of a Tech, do you think if the Fed decides to raise taxes to stop the dollar inflating, will the cryptocurrency market go up or down? If the Fed decides to raise taxes to stop dollar inflating. So, that's what we were just talking about, right? So it depends on if the fundamentals of Bitcoin prove out to be true, right? And then I don't think it'll be the whole cryptocurrency market. I think it'll be fundamentally based cryptocurrencies versus the rest of the cryptocurrency market, right? So your tokens, stuff like that, I think go to the wayside. I think Bitcoin itself would be how that functions, or where that would be realized. Anthony Hawking, thanks, and welcome to the Suns on YouTube, and welcome to the Rocket Chat. Boy, Matthew says, that's Son of a Tech. Let's say the merge date is in September. Does mining ETH still profitable the last few days before the merge? So your question would be, so that would all be, okay, so that would all be a timing thing, right? And my inclination would be that they would want to basically have you mine up to the merge date, and therefore they really wouldn't want the difficulty bomb to be going off while they're merging. So it's more about how close, to the difficulty bomb going off, or how long the difficulty bomb is going on for, than it is about the merge itself. Because if the difficulty bomb goes off and the difficulty is artificially increasing, then of course your profitability is going to go down. However, they decide to merge in before the difficulty bomb goes off, whenever they delay it to, then the mining would remain basically as profitable up until that point. The Stick Shark says, ask Tech, they are AC's tough gaming overclock model from Newegg. I don't know that it would have to do with that. I think it would have to do specifically with changes that were done to the Hynix memory. Right? Something like that. Anyways, guys, I am going to head to jiu-jitsu. I'm not going to skip a day, even though I'm super sore. And thanks for all the questions, all the support today, and everybody hanging out in chat. I hope you guys had a fantastic morning and continue to have a great day. Once again, Ethereum's delayed for a few months, at least a few months, according to Tim. So you don't have to worry about that right now. So a few months, 3 to 4 months. My inclination's 4 months. That's talking September. We should have at least a delay until September. We have one more super chat from Hawk Mining Crypto for the $10. Says, at Son of Attack, proof of stake being green is a false narrative. They need servers like AWS to run the network, uses the same energy. They should focus on US military, who wastes 600 terawatts of energy a year. So you got to be careful the way we word all of that too, though. But we have talked about this in the past. You are utilizing cloud infrastructure, so AWS, Google, Microsoft, and so on. The other thing that's needed for that is redundancy. Now, what does redundancy mean? Redundancy means that you always currently have some sort of computer equipment that is sitting idle, waiting for another piece of computer equipment that your, in this case, staked node or staked cryptocurrency is on to fail. So when it fails, it moves over to the other system. What does this result in? Obviously, energy waste. So I would move the argument away from total power consumption and over to energy waste. I think that's the strongest argument you're going to have. So once again, in the case of data centers, etc., what you need to keep in mind is if you have one Bitcoin miner, you are incentivized to keep that Bitcoin miner operational and on the network. When it is no longer operational and it's off the network, it is no longer using the power consumption. In the case of proof of stake, you basically have a staked amount running on a VM somewhere. And for that to be running 24/7, you always have a wasted amount of energy on a piece of hardware that is sitting there waiting for it to fail over to it. So I would target your argument towards waste, not towards total power consumption. And I think you're going to have a much better time explaining that to people just overall, right? This is also goes further for any sort of proof of work when we start talking about reducing the waste of natural gas energy by taking the 20% blow off from flare gas. It's talking about, you know, being able to not waste all of the energy provided by solar or wind while also having a backup in a way to basically push that power back to the grid. The incentives for proof of work mining is reducing wasted energy. End of story. That's what it does. And if you can reduce waste, you are being more efficient, and therefore you are in turn, I think, being better off to the environment, right? That's the way this goes. Otherwise, what are you doing? In the case of natural gas, you're just burning off 20% of the energy production. And that burn off Like they literally, like in a lot of cases, just literally light that shit on fire. That's going into the atmosphere. You know, you are going to burn it off, you know, the same way, but you're actually utilizing that. You're not just burning it off into the atmosphere for no reason. All right. Thanks for watching, guys. I'll see you next Tuesday.